GTii finding the bounce from our number one of two bounce areas. Let's go ahead and find out what could happen for the price action in the coming sessions. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a GTii technicals, raw price action, and statistical thread of analysis on this fine Thursday. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so yes, we are looking at GTii on the 5-day, and this is the descending channel that we've been writing for some time now, for months and months. So we did imply the potential of coming back down and to confirm our newly converted resistance into support of our descending channel, right? So upon a pullback, we did expect to bounce first of all from our 2 spot 618 at 91 cents. I mean, honestly, what I did say was about 95, 96 cents since it was the channel top. But then I did mention that since we're so close to the 2 spot 618, then we might as well do that. This was bounce zone number one. Bounce zone number two was actually the 200-day SMA at about 80, 81 cents. So we actually bounced right off of the 91 where the 2 spot 618 was. It doesn't always meet this close to the penny like that, but since we had touched this candle right over here, right at that 2 spot 618, the likelihood of doing this one was pretty great as well. Okay, so that doesn't mean I have a crystal ball. That doesn't mean I called it well. It only means that it was just a probability that was higher than others, and that's all it is. It doesn't mean that I'm practicing magic or nothing like that. Okay, you guys, I'm not one of those gurus or none of that. The probabilities is this because the trade usually likes to take the trade to the 618 ratio, and that's all. It was simple as that, guys. So now let's go ahead and just see if we're losing or if we're winning. Okay, let's continue puzzling the pieces. Let's put them together so that we can get an overall picture by the end of the analysis. Okay, so now the ARC-Series Crypstex indicators have printed a fresh buy signal, and that's a long signal printed right down here. And which, by the way, these indicators are available to you. Just send me a DM and we'll go over the subscription packages for these fine indicators that Crypstex has given me access to. Okay, so they do give you long and sell signal, short and long signals, or buy and sell, right? So you get a long signal here, it goes up, short signal down, and you get a long signal now, and hopefully let's see what we can do, right? So things are looking still pretty good within the within the ARC Armor indicator. DBSI, in the other hand, it is giving us a massive difference in score. So let's just go ahead and block the visibility from Armor. And as you can see here, we did get the print today, early in the session, actually, right down on this candle at the opening at about 93 cents. So we got that fresh buy signal with this blue little dot, and we have now moved to the upside since. Please look at the score, the statistical score as a percentage here of the bulls versus the bears. We're at 92% bulls and 8% bears, and on the 1 hour time frame in particular. Okay, my apologies. Now let's go ahead and open up the 13-day exponential moving average. We should be close to above it or above. Let's see. Yeah, so now we're freshly above the 13-day exponential moving average, so this is a very good thing. We've actually used it as support and as a continuation to the upside. Very good things here. Let's go ahead and now move on to the next chart. This is the statistical side of the analysis. New viewers, what you're looking at here is volatility versus momentum, and momentum is actually, volatility versus momentum, and this is momentum. Okay, stochastic momentum is the indicator, which is proprietary to TradingView software, which, by the way, I'm an accepted affiliate to TradingView, and if you would like to help out my trading future, please, the link is in the description below for you to consider opening up an account with TradingView. Okay, so volatility is direction neutral. We've actually touched on this a few times now, more than a few times if you're a regular viewer, and the path is still favoring that. Like I said, you guys, it's just this is such a massive move to the upside that there's no telling what could happen. Okay, I have mentioned to you guys that there are several iterations from this back test of volatility versus momentum, where we've gotten, for example, this one. This lasted, let's see, from September 1st, 2022 to about September 17th. So that's about 16 days. And you're looking at a 107% thrust, okay? Versus this one over here that happened over the span of 51 days and they got 1,671%. This time around, when we met the criteria, just like the way we're doing right now, didn't even move 1 cent up. In fact, it guessed it the wrong way. Okay, we have a 297%, we have a 305% over here. There are several variables from the back test that lead us to get this like one, the one massive mean. And that mean, of course, is the one that everybody's talking about, that I continue calling the 3,200%. Remember that it's not a certainty. It's just a statistical variable. I'm not saying that the shorts are going to get squeezed. I'm not saying any of that. I'm just saying that this is the statistical variable and we have to trust the data, and that's pretty much it, okay? But within that move to the upside, we got to prepare for the possibilities of the downside or the upside, okay? So, from the exact firing of the signal, we've done a 253 spot 54% move to the upside, okay? But from the overall bottom that I said at around 47 cents when it reached 45, it's moved up 300 plus. Okay, so it's got to take a breather. It's got to do its thing. So I'm not God, and I'm not going to tell you that this is actually going to go up or down like indefinitely. I can't do that. Price action is random. We're talking about behavior here. Okay, so but as long as the criteria is still met, I mean, we're well within critical volatility, which is anything above 90%. And the stochastic momentum, which has guessed the asset's direction. I'm talking about it's guessed the direction of the asset of GTii, particular to the 3-day chart, literally 10 out of 11 times. And that has given the momentum upside accuracy a 91%. Okay, so this is giving us a 91% accuracy in guessing the direction of the asset. So I'm going to favor this. I'm going to favor this and not the sentiment. Okay, so I have to trust the data in this area. You guys know how discretionary I can be, but in this case, I have numbers. Okay, so I obviously would love for the iterations to be more than 80 or 100, but still, this is all we got to work with. So we're gonna continue as such. All right, so yeah, so back to this. The momentum is still suggesting a massive aggressive upside. Volatility is still in critical. So the play is technically still on, and that doesn't mean we're not gonna sell off tomorrow. It just means that the play is on until further notice. So let's go ahead and now move on to the next chart. This is the first cup and handle that I had called. I hate cup and handles. Anyway, I did mention the possibility of us continuing to the downside, particular to the 91-cent area, based on the connection of these candles over here. I know that some of you already remember that. So the reason why I said that the possibility is great for us to reach down to this area is so that we can potentially make the other shoulder of an inverted head and shoulders. Okay, so you have your head here, and shoulder, and potentially the upside move is coming now. Okay, so a very good thing here in candle analysis is the simple fact that we've created a hammer candle at the bottom of that trend. Okay, so now upon the closure of this 8-hour candle, which will happen in about 2 hours, this will be the confirmation candle for this type of quote unquote reversal, or yeah, we can sort of call it that. All right, so things are looking still like we were talking about according to plan. So now let's go ahead and move on to the last part of the analysis, as this is very important. Divergence is what we're looking at here, okay? Where is the opposition of price action versus momentum. Please don't mind the white lines, okay? The white lines were actually part of the bearish divergence that we actually caught 2 days ago, or 2 sessions ago, right? So that we can see the downside coming in. Now we have printed a fresh set of bullish divergences. In this case, we have, let's see, 1, 2, and 3 drives of phantom regular bullish divergence. Okay, just like this one here, where price action is making a series of higher lows, and I'm sorry, where momentum is making a series of higher lows, and the price action is making a series of lower lows. Okay, so in this case, here it is for you for the regular side. Okay, and now we have 1 drive of phantom hidden bullish divergence. Okay, so this is the inverse of this one right here. So the yellow line represents that inverse. So now it looks like it's already in play, and that's very good. The moving average on the 12-hour RSI is suggesting upside. Very good. So let's go ahead and just open up a multi-pane so that we can see what kind of edge we can get for tomorrow's session. All right, so let's go ahead and open up the 30-minute like always. Here's the diagram for you to take a look at, the 4 zones, and as they are right over here, okay, these 4 zones, and 30-minute immediate short term is a bit flat. slight suggestion towards the upside, however, and the proximity between the bull weakness middle and that gravitational pull zone right in here is that distance is very, very short. So if we do make a little bit of an upside move here, this is actually going to be gravitated right into bull strength percentile. Bi-hourly has made its bullish cross above the moving average, which is very good, and it is in the shallow areas of the bear weakness percentile, which means that we are likely to be pulled up here. Okay, so this is going to be a slower, gradual move since it's not so aggressive. Okay, but it is corrective. Okay, so now the 6-hour time frame is suggesting an upside. It's very much in the shallow areas of the bear weakness percentile. However, do notice that we have the moving average above us right over here. It is quite a distance away, which means that we can potentially see a type of resistance somewhere, like all price action every single day of every existing day of trading forever. Okay, there's going to be a resistance somewhere. All right, so now the daily time frame RSI, since we already saw the 12-hour divergence, is suggesting now a corrective move to the upside. So it is rejecting the deep areas of the bear weakness percentile, and the moving average is serving kind of like a guide towards the upside. Okay, very, very small pivot towards the upside, but still upside nonetheless. Now the daily is suggesting something very similar to the daily. Okay, so now the 3-day is still suggesting some downside. Please know that we're right at that deep area, and there's some risk here that's going to potentially happen in I don't know, next week or something. So as we continue on with these larger time frames, it just gets longer and longer into time. Okay, so it looks like there's some limited upside happening, and the upside may actually be limited to maybe the end of the week. I'm sorry, to mid next week, or late next week before we find an eventual pullback. Okay, so because there's FOMO in this, because there's a huge amount of psychology in this, it's hard to give exactly what target we're going to go up to the top, but we can only speculate before we can see another pullback. Okay, so the most obvious target for us to consider is the current highs. Okay, first of all, do know that we have the SMA 100 as resistance right over here, and that can right over here, meaning at $1.55. Okay, so there is a massive amount of resistance there. We have to consider that, okay, because it's not only the SMA 100. We also have as resistance the SMA 50 and the SMA 10. Literally, the range that I can give for the next week could be between about 153 to about 174 before finding a pullback and essentially start making something like this. Okay, something very similar to this. Okay, so we can see that the price action can continue to the upside, and then we come back down. We can test this area once again, even potentially the newly converted resistance into support, and then continuing on to the upside. So this like I said, guys, this is not easy, and this is very much difficult. Okay, so there are a lot of potentials here too. Okay, I'm not gonna begin to lie to you guys. The reason I'm seeing this downside in the weekly and on the 3-day and on the 5-day from the RSI. I'm seeing this right here, and that's only making me feel that there could be a strong potential of us building a type of bear flag here. Okay, so if we are building this bear flag, that means that we have touched the bottom side of the triangle, and we are in fact going to be moving to the upside and right at the resistance. It's funny that the SMA 50 and the SMA 10 are right at that resistance that we're talking about. There is the potential to where we can use this as that resistance coming back down here and eventually failing this. Okay, so if we do fail this, we're gonna have a hard time keeping up. Okay, so this is on the 5-day chart too. So I'm talking about this candle's not gonna close till 3 days and 22 hours. So that's almost 4 days away. Okay, so that's why I'm telling you that potentially end of next week or the beginning of the following week, even we can actually see some downside coming in. All right, so please be aware of that. Okay, I'm calling it right now. I'm telling you guys right now that there is the potential of losing this, and we can actually see the current highs or close to the current highs where we were at about 300 or 253% up or 230% up, and then we could actually lose it and then come down. Another thing you should notice is that these triangles usually close out at about 70-75% to the apex, and this is 75% to the apex on the next 5-day candle. All right, so definitely I'm putting out my warning to my bulls that if you guys are in some type of profit within the area of about like I said, 163 to about 174, I would highly consider taking some of those off the table. Know that I'm not a financial advisor. Take whatever I do show and say and iterate within these videos as just a form of entertainment only, okay? I need you to do your own DD and everything will be just fine, okay, you guys? We need to practice the charts. We need to look at them. We need to practice our discretionary side as well as our systematic, rules-based side for trading. All right, you guys, I hope this video helped. I hope that I brought some clarity to the picture, and yeah, but with that said, oh, you guys, if you I'm gonna make sure to leave the links in the description below if you want to join the Discord or if you want to say hi on Twitter, okay? But with that said, I wish you well, a very good night, and I will catch you at the bell mañana. Adios.